What I like the most on our first meeting, Pauline, you told me an analogy of the big five when it comes to finances, which changed how I look at finances all the time. Would you like us to talk about that again? The big five?
No worries. So it's usually a documentary. It involves the big five animals, if you can still remember. So a lion, once it targets, gets its prey, it starts eating. It forgets it has cubs. There's the lioness. It eats. It saves fast. It saves on itself fast. Then you go to the cheetah. Again, in its preying, what do you see?
It moves really fast.
And
that's all I know. It moves really fast.
The main thing about the cheetah is focus.
Oh, it's focus.
Yes. The elephant. So in Kenya, we have what you call the elephant corridors. You've heard about them?
Let me just say yes.
Ndogo akipitia barabara 100 years down the line, the generations will remember the same path. Yeah. In terms of India transport, don't you know about elephants? What's so common?
They use them a lot to carry people and stuff.
And it will go back home alone.
Oh, really? I didn't know that.
You just watch those films in India. You find the elephant is there. Imebeba, let's say, the father, the mother. It will drop one here, drop another, then find its way
home.
Yeah. Wow. So in terms of knowledge, the brain of an elephant has that memory. The rhino in the normal terrain, how does it behave?
How much? It's aggressive.
It's fierce.
It's fierce.
The word is fierce. Huyo mnyama akicharge atapita na wewe.
Atapita. Hakuna kubahatisha that much I know.
Hata mti. Yeah. So I think we're in the last animal.
Buffalo.
The buffalo.
Master. That's what
You've
I know.
seen a buffalo walk alone?
No, never. They're always in herds.
So yes, it takes so many years to form that herd. According to those documentaries, it takes more than 50 years.
Wow.
20, 30. You know, it's long, eh? So the thing about a buffalo is patience. Something we don't have.
No, we don't.
Especially young people, they want to be rich overnight. They want to, wealth accumulation is instant.
Who doesn't? Who does it?
So, in short, insurance is a pool where there's a contribution of the majority, but only a few utilize it.
Hi guys, welcome to yet another episode of the Financial Lens on the Rare View podcast. Hey guys, kama kawaida, I am your host Rachel Anita, and today nataka makofi na vigele. Okay, I'm getting used to this. Makofi and vigele. Today I'm with the awesome Mrs. Pauline Kinyua. Pauline, say hi to my audience.
Hey, hi.
Tell us a little about yourself.
Pauline Kinyua. I'm a financial consultant. My main company is Britain. Yeah, and I'm here.
And you're here.
Lady, Anita.
I'm telling you. Guys, when I told you I'm getting you the best of the best, this is Pauline. And she took me, Pauline, the person who made me realize there's a difference between saving and investment. Anyway, I'll get to that later on. What I like the most on our first meeting, Pauline, you told me an analogy of the big five when it comes to finances, which changed how I look at finances all the time. Would you like us to talk about that again? The big five?
No worries. So it's usually a documentary. It involves the big five animals. If you can still remember.
There's the lion, there's the buffalo, there's the elephant, rhino, na kuna yenye nakimbia, cheetah. Yes.
Awesome. You're a good student.
I am a good student, guys. Awesome. I was an A student.
So apart from them being called the big five, they have life lessons, both financial. They can also be personal. Yeah. So if I start with the lion, when you see their hunting skills, what is so unique?
They always get what they want. I don't know.
Yeah.
Yes.
So a lion, once it targets, gets its prey, it starts eating. It forgets it has cubs. There's the lioness.
Yeah.
It eats. It saves fast. It saves on itself fast. It eats. After it's done, imeshiba. That's when it's like, oh, hey, come, the hyena, the cubs.
Yeah, everyone else.
But as human beings have a tendency, once you have, let's say, your pay slip or your business income, the first thing you do is, distribute it elsewhere.
We forget about ourselves.
Exactly. Taxman even doesn't borrow you the permission.
They just take it
from the meter. Yeah. And then you go to the second, rent. You have employee salaries. You go to which other expenditure is in the house? The groceries. Everything.
Yeah.
But at the end of it, when you're down there, is when you're like, I haven't saved anything. I haven't put aside a certain percentage, a certain portion. Yeah. So the analogy of the lion is start with yourself first. At times, start with yourself first. Yeah. Then we go to the cheetah. Again, in its preying, what do you see?
It moves really fast.
And
that's all I know. It moves really fast.
The main thing about the cheetah is focus.
Oh, it's focus.
Yes.
Like
in a group of 100, say, it focuses on one. The prey is one antelope. It lands on that. No matter the many that, will pop out, it's the
that
focus.
That
one. So many will prop, but it will run to get, the farthest. Yeah. So the tendency with us human beings, again, we don't have that focus in life. You've set yourself 2025, this is the year, I'll do 1, 2, 3. Then along the way, someone calls you, hey, you've seen that new car, for example. So the saving you are doing,
out the window.
Yeah, you were to join this class, say of investment, you were to join some cookery classes. And then along the way, a friend tells you, have you heard about this charmer, about this group? That time you deviate to something else. Yeah. Even when it comes to your budgeting, your focus is to attain a certain amount, a certain target. But along the way, you have others. So you lack the focus. So the main thing about a cheetah is the focus. Yep.
I feel attacked, but yes. Yeah, I do relate.
So the third animal is which?
Elephant? Yes.
The elephant. So in Kenya, we have what we call the elephant corridors. You've heard about them?
Let me just say yes.
Ndogo akipitia hii barabara 100 years down the line, the generations will remember the same path. Yeah. In terms of India transport, what do you know about elephants? What's so common?
They use them a lot to carry people and stuff.
And it will go back home alone.
Oh, really? I didn't know that.
You just watch those films in India. You find the elephant is there. Imebeba, let's say, the father, the mother. It will drop one here, drop another, then find its way
home.
Yeah. Wow. So in terms of knowledge, the brain of an elephant has that memory. Yeah. Okay. So relating it with us humans, it requires to do a lot of reading, mingling, like we are doing, to sharpen our brains, reading good books. 5-10 years down the lane, you have generations looking up to you.
Yeah.
Yeah. So the elephant basically reminds us that try to seek that knowledge, attend financial awareness classes. Yeah.
Listen to this podcast.
Listen to Anita's podcast and so many other financial well-being.
Yes.
And then the next would
rhino.
Be the rhino. Yes. What do you know about the rhino?
What do I know about the rhino that is rare? They have a horn. And I realize I just don't know much about wildlife.
We have an activity here called the rhino charge. What do you see in that? I know it's organized, I think, by Safaricom and some other company. KCB, I don't know.
I don't know. But I know in the rhino charges, it actually really, it doesn't use the sight so much. It's more of what the hearing. Yeah. And it goes straight, doesn't divert that much.
Okay, so the rhino in the normal terrain, how does it behave?
How much? It's aggressive.
It's fierce.
It's fierce.
The word is fierce. Huyo mnyama akicharge atapita na wewe.
Atapita. Hakuna kubahatisha that much I know.
Hata mti. Yeah. So when they do the rhino charge, there's usually this rough terrain. It's muddy, soggy, and they have to navigate gari inapanda ama motorbike falls, you know. For the rhino in relating to us, it's simply about being fierce, confronting your issues,
head on.
Yeah, may it be finances, family, friends. You know, I sit down with people and they're like, Pauline, I'm so much in debt. How do I get out of this? Pauline, I've been trying to set these goals, whether they are financial, I'm not able to meet them. You know, it's time you be fierce, confront those. Yeah. If it's a no, it's a no. I don't have for lending.
Yeah. Oh, well,
I will not borrow.
It's a bit tricky.
Yeah.
Before it takes a lot of discipline to get there.
Yeah. So that confronting aspect is a mindset. Yeah. Which you relate to so many things, to reach a certain goal.
Yes.
Yeah. So I think we're in the last animal.
Buffalo.
The buffalo.
Master. That's what
You've
I know
seen
about
a buffalo walk alone?
No, never. They're always in herds.
Awesome. So yes, it takes so many years to form that herd. According to those documentaries, it takes more than 50 years.
Wow.
20, 30. You know, it's long, So the thing about a buffalo is patience. Something we don't have.
No, we don't.
Especially young people, they want to be rich overnight. They want to, you know, wealth accumulation is instant.
Who doesn't? Who does it? You know?
Yeah. Wealth accumulation is instant. Yeah. So when it comes to patience and getting that journey, it involves a journey of trust. You know, for those buffaloes to trust each other, we're gonna go through this terrain together. This is the feeding patch.
Yeah.
You know, for them to have that herd put together, it takes a lot of patience.
Yeah, it does.
To also understand the other. Yeah. So it's a financial goal. Yeah. You know, for example, you have a young child. 18 years from now, they'll be going to college. But you just sit and think money will
come. It will come. We always have hope for a better future.
Yeah.
Let me defend them, kidogo. We hope things will get better, even though we're not working towards that.
That is what I call ignorance. Because truth be told, there's college.
Yes, there is.
There's secondary. There's, high school. Yeah. So not unless you put something to plan for that day, you never know about tomorrow. I think there are so many plans you can put in place to secure a future you're not aware of. Yeah. So that patience calls for us to start a journey. You know, you don't hear of any investment coming, it will earn you this much, and you're there blindly just going
taking
for it.
Up.
It's good you go through the process.
Yes. Yeah. Now this brings me to why I called you here. Using insurance as a wealth building tool. Why do you feel like any human being walking on this earth should have insurance? I know there are many types, and okay, I don't want to ask you two questions at once, but what is like the most basic thing someone should have when it comes to insurance?
That's a tough one. Because insurance is inevitable.
It's inevitable. But people walk around. How many people do you meet who are...
Actually, the penetration is around 3 to 4%. That tells you how
low it is.
Yeah. But I usually say insurance is inevitable. It's a safety net. It's a cushion. It's a buffer. It has all the right terminologies. However, out there, people do not understand how it works. Yes. So when you ask me who needs, or that's what you say?
Yeah, who needs it? Because people are like, people, someone says, me, I'm healthy. I don't need health. I've never been sick. This reminds me, about Trevor Noah?
Yeah.
There's a story he gives about his mom getting shot. It's on YouTube. Then he's like, his mom stopped her medical insurance, the payments, because she's like, I never get sick. I never get sick. I'm 70, 80,
Yeah.
You know what she didn't think about? Bullets. He puts it like that. It's so funny. So people someone is like, may never get sick.
Yeah.
I don't have a car. I don't need car insurance. What other things do people insure? Really basic. I don't have a nice house. So what's there to insure?
So the first thing about insurance is something called peace of mind.
Yeah.
So when you have insurance, in the various classes of insurance, may it be personal, savings and investment, property insurance, general insurance, golfers insurance, marine insurance, all these things.
Okay.
When you're procuring or having them, the basic thing, peace of mind. Yeah.
Peace of mind.
Yeah. So if I was to touch, for example, we talked about investment saving for an education.
Yes.
Or for a certain goal or towards retirement. I mean, you're at peace. Knowing there is a fund you're building.
For my baby.
Yeah?
Yeah, by the way, guys, Pauline helped me set up that fund for my child because I was those people. I didn't know. She made it seem so, like, nikaona tu mtoto wangu atafika university so fast. I blink like this. If I don't do anything about it, she'll reach there and I'll be stranded. And the reality is there. So peace of mind. I do agree.
Yeah. So that's the best answer I can give why insurance is important. Because it relates to medical. Yeah. You find someone has gone 5 years and they're like, Pauline, why do I need to pay for this medical? I'm not choosing it. They don't pay. The next year there's such a huge bill in hospital. Yes. It will ruin all those years of hard work. You sell an asset to pay up the medical bill, or your child has gotten a scholarship somewhere, you need to really
raise that money, you can't.
Yeah, so it's inevitable.
I do agree. But sometimes, like you said, you pay insurance for so many years, you don't feel like you're earning anything. You feel like your money is just going. Every year, it's just going. Like, why? Okay, there's that peace of mind, I get it.
Yeah.
But kuna you feeling like you're not earning from it. So how do you make it an investment more than a saving?
Okay.
Yes.
So the fundamental point is, why are you buying it? Yeah. Because if you sit down with a person and they mention a child, then my role is to first tell you which one you require for the child. If you're a young person and you're looking for some medium-term goals, short-term goals, then definitely I'll go to where cash flow is king.
Yes.
I'll tell you this will earn you this at a compound interest of this. So you're good to go. But you can say your money is lying idle for the next 20 years.
Yeah.
Because one, there's the aspect of benefits, life benefits, protection benefits. Should you be ill, it takes over. Yeah. God forbid, worst case scenario, death. Yeah. You're the breadwinner. Mark my word, breadwinner. The bread is gone.
What happens to the
eaters of the bread? On top of that cost, on top of the cost of what will be left behind, this is also the cost of sending that person to be born by the same family. So there is no way you can compare the long term of an insurance cover to benefits of interest, because it's simply a transfer of risk and it still earns. So the basic thing is, when you sit down with someone and you're doing your financial planning, be guided. This will earn this. This is the expected. This is pure protection cover. You sit down with a client and tell them, I just want a funeral cover. And they're legit because they've seen the costs that come with it.
That comes with funerals.
Yeah.
And I feel like most people need that thing. We don't want to talk about it because we really don't like talking about death in general. But have I been in a situation? I've heard of situations where someone died and everything from the hospital bill that was left to the burial is catered for by the insurance they had put in place. Ata mimi, I'm scared of taking it. It means like you're accepting this is going to happen. It's so hard.
Yeah. Believe me, that's a myth. The minute I said the mindset is a very strong, yeah. The minute you put it in your mind, you're taking this is when you get this, it's wrong. Because we've had both been there 20 years. So when it comes to the insurance, general insurance for vehicles, motor vehicle, someone says, I've paid comprehensive for so long and it's costly. Let me do third party.
Yeah.
Just when they've taken third party, stuff happens.
That is really the saddest.
Yeah?
Yeah.
So no one can predict or give a probability of the risk or the occurrence. But either way, I told you, peace of mind comes first.
Yes.
You have it in place, so regardless, you're sorted.
That brings me to, there's an insurance that usually makes me happy when I think about it. Life insurance.
Yes.
I remember when we sat down with you, I told you, this insurance sounds so good that someone would either fake their death or kill themselves so that people get this money. Why is it that good? Why is it important to have life insurance? And tell us about the people who have scammed insurances and they're not dead. They pretend to die so that they get money.
Wow. Where do I start with?
Who needs it?
Who needs it? Yeah. So insurance, like I said, is inevitable. It's for everyone. Yeah, regardless of the age. Remember, life is a cycle. You're born. That parent will require medical in the hospital,
Yes.
to cater for that cost. You go into what we call a consumption stage, which is now children below, actually up to 17, 18. They're simply consumers. Yes. They won't want no, so long as there's food in the house.
Like they're simply consumers. What a way to look at it. Anyway, yeah.
Then the next cycle, why now it's for everyone, is because between age 18 all the way to 60, now you're both a consumer and a producer. You have to feed, you have to eat. But at the same time, you have to produce to have an income, whether it's on payslip, whether it's a business income. Yeah. Now that is the period during which we say insurance starts on your first payslip, on your first income. That's where you set aside. Reason being, your expenses are low.
Yes.
By the time you're 60, it never surrenders.
Yeah.
The expenses are high. Remember, you're planning for also your exit, your retirement. Yeah. So it's at that critical stage of between 18 to 60, where now you have now the phases of accumulation as you go now to deaccumulate what you've been saving. Yeah. Am I being too technical?
No. I'm getting you.
Yeah.
Yes.
So the scenario of someone taking a life insurance cover and wanting to be dead to be paid. Okay, I don't have a real practical example, but I think that will not be right because the insured, we also have people on the ground to come and find out too. Yeah, because many a times the beneficiaries are minors. But unless someone really puts a beneficiary to be someone above 18 and he or she is aware.
That is tricky. Because someone is just looking at you like they have a bounty on your head. If you die, I'm getting 40 million. I mean.
So the motive is usually, the motive at the end of the day has to be rule. That's why you have investigators on the ground. Yeah. The same thing, someone is being declared bankrupt. Thinks you can take advantage of insurance, wake up, burn your huge car. I mean, the investigators on the ground who even ask for the statements, who find out about you around you. So that is a scary point. Don't go there.
It is scary. It is scary. It is very scary.
Yeah.
Talking of insurance again, of late we're learning that we can insure so many things. What do you think are some types of insurance that people don't know? Things that people can insure that they don't know they can insure. Like for me, I recently learned I can insure jewelry. I didn't know you can insure jewelry. I didn't know I can insure my phone or my laptop, or like it's very basic stuff that we don't think. When you think insurance, like I said, we think big. We think it has to be education for my kids or my car or my house. So what are some insurances that are out there that people need to know that they probably don't know about yet?
Okay. So the guiding principle on what you require is really anything you want to safeguard.
Okay.
Yeah.
So anything you value.
Anything you value.
There's not like a price tag to
So like you said, what you've talked about, your watch, your phone, your iPhone, your jewelry, your laptop, they fall under what we call a domestic package.
Okay.
Whereby now I tell you, hey Anita, I need the value of your house contents. Yeah, I need the value in your own house, the building, So I'll start by insuring the building, and then the contents, then what we call mobile. Yeah, because I mean, you traveling, you need to carry your laptop, you have your phone, you have your ring with you. Yeah, so all these components, we call them all risks. We tell you per year, this is the amount. And you find at times a whole year is around 4,000.
Are you kidding me?
Yes.
Pauline, mbona hujaniambia hizi vitu? I should have.
Behind.
Guys, we need to talk. Yeah. We need to talk mainly after this.
And then
it can be that affordable.
Yes. And then what most Kenyans don't know is that on top of that, you also get to insure your domestic worker in the cover.
Oh, really?
Remember, it's the person you're leaving behind.
Yeah.
There is gas that can explode in that house. God forbid, yeah. And you know the next thing, relatives will be after you.
Yeah, what happened? What happened to our person?
Then I'll come there visiting with my, what do you call them? Heels. And I slide. And I ask you, I saw you ask, do you have an occupier liability? You don't. Then pay my bills. Because I'm your guest. So there is so much that is not known out there.
Yeah, because I'm like, actually someone can come to my house, fall and sue me.
Yes. Or your
what
dog
do you mean?
bites.
Why you came to, it's my house.
That's why it's important to have what we call occupier liability.
Hey, that is news to me. Yeah. I didn't know
Actually, when it's your own building, it's your own building, your own house, or your own organization, we have what we call the owner liability. It caters for those, those costs that may arise. But when you're in a rented place, it's called occupier liability. Wow. Yeah. So there are places you go, you see parked at owner's risk. Or wet floor at your own risk.
Yeah, no wonder we see in movies, mtu anamwaga nini, ana slide, anajiangusha, then he's like, I'm going to sue, because they know they can get some amount out of it.
Yeah.
Oh, wow.
People don't also know the difference between a third party and a comprehensive. Like now we had a case, some guy took a third party.
This is on motor insurance?
Yes. And he hits a lady. She dies. Yeah. So she's the breadwinner. So on top of what the court, the only arbitrator for a third party is a court of law. So the court award around 5 million. Insurance pays 3 million. 2 million, you touch and pay.
You have
but
to pay.
People are like, let's just have third party on my car. Or you're there taking a lift. Then it's involved in an accident. The car is used, it can't be repaired. If you'd lifted someone, they're in an injury, they're disabled. I mean, they go to court, they say, I was the breadwinner. They owed me a duty of care when they offered me the ride.
What?
Here I am.
When they offered, I gave you out of goodwill. I'm giving you a lift and then I'm being liable for you.
So that's why, those are some of the elements why insurance is important. Wow. And people just take it like, they think it's for a few.
And there's something you also mentioned behind the cameras about comprehensive. You said it doesn't cover your relative. Ama, what did I?
So an insurance cover covers the car. So in case of a damage or the car is stolen, we indemnify you, the car. Yep. Or we do the repairs. If you had carried, say, your spouse, your spouse ought to have bought a personal accident. It is not included in that. So it does not cover for the cost of the driver and the immediate relative.
Hold on. So who does comprehensive?
So it covers the third party. So you go, you injure a child, or you hit someone's car or property, or the person you've carried and you have a third party, the medical costs for the third.
Okay.
Who is not related to
me.
Yes.
Myself, am I protected in the comprehensive?
Just your car.
Just the car.
Yes. And those suits that arise.
If a car is in an accident, I am driving the car.
Yes.
If I don't have a personal accident cover or a health cover, medical, I don't get compensated.
No. Okay,
Zima easy Vito, please.
honesty.
These people are scamming us. What do you mean I'm not what do you mean? My name is literally, I'm the one paying for this thing. What do you mean?
Trust you me. Honesty.
So how many?
Honesty is the only policy.
I know it's the only policy, but how many policies am I supposed to take to be like holy?
Cover. Okay, once you're given your policy document, rarely do you go into the fine print.
Don't.
You don't read.
We don't. We just sign.
And that's why I prefer take time. Sit down. What is this I want? What is the pros? What are the cons? Yeah, because insurance basically is proactive. It's not reactive. We don't come to you after something has happened. Yeah, so it's good to know the driver is not covered. Buy a personal accident and have your own medical
cover.
Yes.
Where?
All right. So when it comes to that domestic package, we've mentioned about you having a domestic worker.
Yes.
Yeah. So there's a certain amount added to the basic premium. This caters in the event of an accident in the house that she may have. God forbid death.
Yes.
So what happens? We ask for the annual earnings of that household. That's the amount we pay out on average.
Okay.
Yes, to next of kin. Of course, it will come to you, but next of kin.
Yeah.
So you find again from what I said on onset, it gives you peace of mind. Because most of them, when they come to work for you, you're not related.
No, you're not.
Where we are employed or those people with businesses, they take what we call WIBA, work injury benefit cover for their staff. Yeah?
Work in what benefit?
Work injury.
Work injury benefit.
Yes. That within that time they are working from morning.
Okay.
As they work, they're at the place of work. Any injury, there is a compensation to it. Should the disability come in, there is the average earning. Someone is paid for like 8 or number of years. Wow. Yes. So some of these things most employers don't know.
Yeah. And it's sad, but most people don't really value their domestic workers like that as well.
Yeah, and that's why I really love what you do. Yeah. Because again, you come and try to, impart some stuff people don't know.
Yes.
Yeah. Say ignorance is no defense. Now you know.
Now I know. Now what for insurance you are calling. But that lingo confuses us there with those. You're like, okay.
Yeah.
So someone gets confused and they're like, But as you see, when you read the fine print, you actually get to understand that you are the one benefiting from all this.
Yeah.
Peace of mind, you can't really put a price on that.
Exactly.
You can't.
Yes.
This takes me to businesses.
Yes.
Protecting our businesses. Every time we hear there's a fire in Gikomba, there's in town, a building has collapsed, mtu ameibiwa stock. How can business people protect themselves from this happening? What is business insurance? What is it about?
Okay. So that falls under what we call general insurance. Yeah. The main component that is insured is fire.
Fire?
Yes.
Okay.
Yeah. So you come and say, I want to insure the buildings against, some burglary, theft, or but the main element for all that should be there is fire. Because, a fire guards everything.
Yes, and it takes everything as well.
So there are riders to it, like, we will insure cash or the goods in transit. Yeah. So for an ideal cover for, let's say, the person at Gikomba, at times we prefer permanent structure.
Okay.
Yeah. Because now we're able to take the value of the building and the contents. Yeah. So for such a client, it's not outward the amount. They usually fill a proposal, say the stock value they have, probably show some proof, what they want insured, and then we give them a quotation. So it's paid once per year.
People really don't know this. People really do not know this.
They don't.
And is there must someone be like a big supplier? Even small business?
Even small business.
Can someone insure their kibanda?
Yes, that's called biashara.
For real?
Yes, that's
Mama
biashara
Mboga
cover.
can insure the...
No, Mama Mboga, because they're not in some permanent structures,
it has to be a permanent structure.
I advise.
Okay.
Yeah.
Okay. Oh, that's
Of
really
course, we have
interesting.
companies that are trying to come up with other biashara covers, but it's only fair to know that which can be given a cost.
Okay. The other thing I'm passionate about when it comes to this series is retirement planning. So where does insurance fit in retirement planning? Apart from just what we know, where does it fit?
All right. So insurance, if I was to take you back, remember we have 3 categories of all places people use towards a goal of saving. We have the banks, we have the circles, and we have insurance.
Okay. Oh, yeah.
Yeah. If I tell you to save for 20 years in a bank, it's an emergency cushion. You know, you might get a need, you withdraw. But here, when it comes to insurance, you're committing it every month. You know, if it's a lump sum towards that, 20 years from now, 30 years from now. So ultimately, we find retirement planning when it comes to insurance is the best. Because you have a target, number one. Number two, can never go wrong. Whether it's an annuity by that is some income consistently when you're past 60. And number two, it's not money you're going to get anytime. Yeah, you know, business people, this idea comes.
Yeah, you divert your money.
I know where I can get liquidity.
You go sell everything and remove everything from the bank.
Yes.
Yeah.
Then remember, it's in retirement, whereby at that old age, the needs are so many. Medical, food. Remember when I said about consumption? You go back to like that stage of the young baby. You're on a special diet. What else? That's when you want to go to those 2 holidays.
Yeah, vacations and relax.
So I don't expect you again, Shelby, will be saving in a bank or a circle. Yeah. So insurance is perfectly aligned, saving towards retirement. And for those on payslip, remember, that's the only channel where there is the employer contribution and employee contribution coming together. They don't do it in a bank, they don't do it in a circle. So ultimately, when you're on your own, individual, you just need to have that kitty saved in insurance.
Wow, that would be. I think we've learned a thing or two about insurance. But now, mimi niko na some myths here as we wind up that I want you to demystify about insurance. One is young people do not need life insurance. Personally, I used to think life insurance is for like old people. Ukishaona unaenda kukufa. Okay, sorry, not kukufa. Okay, that's such a wrong thing to say. Like when you see, like you get like you've done everything. Now you're seeing the end of your life. That's when you start taking life insurance. Someone who's young, why would a 20-year-old take life insurance?
I reiterate, life insurance starts from your first payslip. Yeah, from your first income. Remember, when you look at the mortality rate, for men is around 65, for ladies around 69, 70. So it's within this time frame, unaanza kujipanga. You don't expect you're 25, you've not saved. You're 30, you have a young one, and you expect to have a product that will take the child the following year to school. True. Yeah. So not unless you start at 25, that culture of saving towards the future starts there. And then it's a myth in the sense that people believe insurance is for the rich. Yeah.
That was the other one. That was the insurance is for the rich.
It is not.
It takes a lot. Let me tell you, it takes a lot. Even you, why am I telling you? And you're in this space. I think it takes a lot to convince someone that you need insurance. Someone who's like hell bent on saying, insurance ni ya mtu maybe ana 100k and above. Mimi na hii 30k yangu niko tu sawa. Hata sina hiyo pesa.
But I tend to differ because I think it's mandatory. I'm not going there. Come to shift. Are we being asked whether we want? Is it optional?
Yeah.
It's mandatory. Yeah? When it comes to insurance for a young person, they're optional, saying, I want this medical with this feature, with this feature. Right now, if you ask me what shift has, I don't know. I don't know where to log in and see my benefits.
That thing is so confusing.
Yeah.
But anyway.
So, in short, insurance is a pool where there is a contribution of the majority, but only a few utilize it.
Okay.
Yeah, because when it comes to those comprehensive covers, no one is buying with the intention of having an accident.
Yeah.
Yeah, that young person buying a car, and it must be on the road with insurance, whether he likes it or not, is not buying with the aim of an accident. Is that, should it happen, there is a cushion somewhere.
Yes.
Yeah.
All right.
They are planning, let's say, to do their masters.
So should we make insurances in general? We should add more mandatory and compulsory insurances so that people understand the value of it. Do you feel like when people are pushed to do it, they do it because they have to?
There's some places where it's mandatory. Yeah, like no doctors, they must have professional indemnity. They can't work without. In some of their employers, we have engineers. They need that indemnity. You go to a building and there's this big post, the contractor on site. You know, he knows the risk that comes to. He might never use it, but it's there. Yeah. So personally, I would encourage the young people, please start saving, whether it's through money markets. You will go to a life cover. Don't come when you have a young child. Start early.
Pauline, if you want to talk to me, just talk to me directly. Niite pale uniambie, Anita, this and this. Yes, but I do agree. Yeah. But also, it can never be too late. Like if you've had this and you've just learned about it, come. And
the younger you are, the higher the return.
Yes, the better for you, actually.
The better for you. The older you come knocking, the higher the exposure, the higher the risk, the higher the premiums.
I do agree. So, what are the common mistakes people do or make when they are taking insurances?
All right. So they rush. You don't have time to sit down with an advisor. You give them your needs. Yeah. Why are you taking it? So you rush, take. After 5 years, you're like, I took an investment, yet I needed education. And I'm already 5 years older into this plan. You can't surrender it, you can't lose it. So the first thing, please take time
to understand
what you want. Get the advice. Yeah.
Okay.
Number 2, also know some of them are sunk costs. By sunk cost, I mean it's money you don't expect back. Okay. In the event of a comprehensive car or the sheaf, and don't ask me why I'm attacking sheaf.
We're not going there.
So, labda have not used that cover for 10, 15 years. Someone else probably has utilized.
Yeah.
But I can go back to them and say, hey,
can you give me back my money?
Yeah. So that is what we call a sunk cost.
That hurts though. I feel like maybe there should be like a percentage you give the good client. Someone has not hit their car in like 5 years. Patia mtu mkono wa shukrani. At least you're a good, customer.
Yeah. Because the essence is of this fund, remember there is someone who will pay today, say, a premium of 70,000 for a car of around 2-3 million. Then the car is stolen. Insurance has to reinstate.
Yes.
And the premium received was only
like maybe for a month or 2.
So
yeah. It works.
So again, the Ross ratio. Otherwise, companies would go down every other day.
Yeah, because I've had a case where a car was coming from Mombasa. Ikafika Mtito one day, got into an accident, and the person was paid full.
Yeah.
They hadn't even seen their car, and they were paid in full because it was under comprehensive.
Imagine. So that, especially for such a person with such an experience, do you think they would want to neglect anything that concerns?
No.
Yeah?
I think so.
Yeah?
Yeah. Anyway. So, we've learned a lot about insurance today. Yeah. If there's anything you can tell my people about, one last shot, like, ata kama watasahau everything else we say, what would you tell them about insurance?
I conclude again by saying insurance is inevitable.
Inevitable.
Yes. For purposes of financial planning, insurance. Purposes of peace of mind,
insurance. I feel like this should be a tag in your office. For purpose of peace of mind, insurance. Say it again, then I'll pop again. Insurance. Do it again. I like it.
All right. For purposes of peace of mind,
Insurance.
financial planning,
Insurance.
legacy planning,
Insurance.
estate planning.
Insurance.
Yeah.
Thank you so much, Pauline, for
Thank
coming
you so
on my
much.
show. This has been a learning curve for me. And I feel like as much as my audience is learning, ata mimi, I've got homework to do.
Yeah.
I've got a lot. I have to do a lot.
Yeah.
So thank you. And thank you so
too.
much, guys. If you want to reach out to Pauline, you can send us a DM or an email or call us or comment or everything, and we'll connect you to her. Thank you so much for watching, and thank you again, Pauline, for coming. Bye, guys.
Bye bye.
Okay.